So imagine waking up tomorrow morning, grabbing your phone off the nightstand, and suddenly realizing that banks have just vanished.
Wow. I mean, vanished entirely.
Entirely. Gone.
That is, it's a pretty staggering mental image.
Right. Just think about the day-to-day reality of that for a second. There's no physical bank branches on the corner.
No ATMs.
Exactly. No account managers in nice suits. No waiting days for a loan approval to go through. And no hold music when you're, trying to figure out a weird charge on your card.
That sounds amazing, honestly,
Yeah.
but also terrifying.
Right. In this scenario, it is just you, your digital wallet, and your money. Completely direct. Zero middlemen.
See, for a lot of people, that sounds like a highly stressful alternative reality. I mean, we rely so heavily on that customer service safety net.
We really do. But millions of people around the world are actively trying to build that exact reality right now.
Yeah, they are.
And we were looking over some really fascinating research today. It's an excerpt titled, The Future of Money. Could cryptocurrency replace traditional banking? And it begs a massive question. Could it actually replace it?
It's the multi-trillion-dollar question, really.
It is. And our goal today, for you listening, is to treat this as anything but an overview-only podcast. We are not just skimming the surface here.
No, we need to dig into the actual mechanics.
Exactly. We want to understand the underlying plumbing of this potential financial revolution. Weigh the utopian promises of a bankless society against the very messy reality of actually living in one.
Right. Because to even begin predicting where money is going, we have to dissect the invisible infrastructure that currently runs our lives.
Which is the legacy banking system.
Exactly. We have to look at what we have now.
And it's funny because we are so used to the current system, we just, we treat it like gravity.
Yeah, like it's just a fundamental law of the universe.
Right, it's just always been there.
It is the water we swim in. I mean, for centuries, banks have played this unquestioned role as basically the operating system for human society.
Operating system is a good way to put it.
And the research highlights 4 specific pillars upholding this system.
Okay, lay them out for us.
Sure. So first, they store our money. Second, they process our payments. Third, they issue loans. And fourth, they connect the global financial system.
Let's actually pause on the mechanics of those pillars for a second, because take storing money.
Right.
Before modern banking, storing value meant literally hiding physical gold, or like cash under a mattress.
Which obviously carries huge physical risks. You could get robbed, your house could burn down.
Exactly. So over time, banks provided a centralized vault. And eventually, that physical vault just became a digital ledger.
But the underlying function never really changed, though. We trust them to hold our value.
Trust, that's the key word, right?
Oh, absolutely. Trust is the absolute center of gravity here. I mean, when we talk about processing payments, that second pillar, think about the complex verification happening in the background every time you swipe a card for a $3 coffee.
Yeah, because the coffee shop is basically trusting that my digital swipe actually translates to real money arriving in their account.
Exactly. And they trust it because the bank sits right there in the middle as the ultimate referee.
Right.
The bank looks at your ledger, confirms you actually have the $3, deducts it from you, and credits the coffee shop.
So the bank is the trusted third party ensuring no one is cheating.
Precisely. And then you add in the third pillar, issuing loans, where banks act as the gatekeepers of capital for homes and businesses.
Right. They decide who gets to build what.
Yeah. And then you have the fourth pillar, connecting the global system. They navigate international trade laws, they exchange currencies.
So basically, if you want to participate in the global economy at all, you have to use their system.
You do.
You play by their rules, and crucially, you pay their fees.
Which, for a long time, was just accepted as the cost of doing business. You inherently needed that centralized referee.
Well, that was the unquestioned reality until 2009.
2000, yeah, that's the turning point.
2009 is when Bitcoin enters the world. And the source text uses very deliberate language to describe this paradigm shift.
It does.
It describes a digital currency that required no permission and relied on no central authority.
And removing that central authority, I mean, that is the earthquake.
I want to test an analogy with you to visualize this shift, if that's okay.
Yeah, go for it.
So if traditional banking is a toll road, right, you have to stop and pay a middleman at every border.
Okay, I like that.
You show your ID, you wait for the gate to lift, and you pay the toll operator a cut of your money just for the privilege of driving on their road.
And it is a highly regulated, carefully monitored
Hmm.
toll road, with security cameras and armed guards.
Exactly. Now, what 2009 introduced was essentially an off-road vehicle, one that goes directly from point A to point B.
Just bypassing the road entirely.
Right. It drives right through the fields. It doesn't need the toll booth. It doesn't ask the operator to lift the gate, and it doesn't pay the toll fee.
It just connects the sender and the receiver directly.
But, and here's my pushback on this, people use the toll road because it's paved, and it's lit, and it's safe.
True.
If crypto is just driving through the wilderness in the dark, why was it seen as a total financial revolution rather than just, complete financial chaos?
That is a great question.
Like, how does that off-road vehicle stay safe without the toll guards?
Well, that is where we have to look at the mechanics of the blockchain itself.
Okay.
Because that's the technology under the hood of that off-road vehicle. In the legacy system, the bank is the single toll operator holding the master ledger.
Right. Their word is law.
Exactly. If they say the transaction is valid, it's valid. But blockchain decentralizes that ledger.
Okay. So how does that work in practice?
Well, instead of one bank holding the record, imagine a stadium filled with 100,000 people. And every single person is holding their own personal copy of the ledger.
Wait, so everyone in the stadium has a copy of the exact same record book?
Yes, everyone.
Okay.
So when you want to send money directly to someone else, you essentially stand up in that stadium and announce the transaction to the crowd.
I see.
And all 100,000 people immediately check their books to see if you actually have the funds to send.
If I do.
If you do, they all update their ledgers simultaneously. The transaction goes through.
But what if I try to cheat? Like, what if I try to spend money I don't actually have?
Then the crowd looks at their books, sees your math doesn't add up, and they reject the transaction instantly.
Wow. Okay, that completely flips the concept of trust.
It really does.
You aren't trusting a single powerful institution anymore. You are trusting the consensus of the crowd and basically the mathematics that verify it.
Exactly. You are completely decentralizing economic power. It fundamentally questions the necessity of the middleman. I mean, if a mathematical algorithm and a decentralized network can verify transactions securely, why should a bank get to hold all the power and take a cut of every single transfer?
Which brings us to the utopian vision of this technology.
Yeah.
The dream of frictionless finance.
Oh, the frictionless draft.
Yes, Soros paints this incredible picture of moving money internationally as effortlessly as sending a text message.
Yeah, the text outlines 3 main advantages here: faster transactions, lower costs, and increased accessibility.
Let's unpack the speed aspect first, because the contrast with the current system is just stark.
It is night and day.
Think about the last time you tried to send a traditional wire transfer, especially an international one, on like a Friday afternoon.
Oh, it is an agonizing process.
It really is.
In the legacy system, that international wire has to pass through a whole chain of what they call correspondent banks.
Right.
So it goes from your local bank to a national clearinghouse to an international partner bank